Good afternoon, I'm Bridget Taylor and this is Currency Wars. Apologies for my voice, I've got a bit of flu, but joining me today on the desk is Anthony Grant from RMB. We're going to have a look at the economic data and what's driving the forex markets this week. The rand fell to its weakest level since 2001 this week and traded a high of 12.82. This is despite the South African Reserve Bank raising the benchmark lending rate for the first time in a year post the rand's 9.6% slide against the dollar this year. The potential increases in the costs of food and electricity threaten to push inflation above the upper 6% target band later this year. And this is particularly if the rand comes under renewed pressure later. Meanwhile, a report out yesterday showed that South Africa's manufacturing industry contracted for a second month, with the Purchasing Managers' Index for July falling to its lowest level in a year. Data out on Tuesday showed that car sales have plunged more than expected last month, and this was after the report that was released on Tuesday. Meanwhile, the chances of an interest rate hike next month in the United States rocketed, reaching 52% on Wednesday, and this was up from just 38% 2 days earlier. This was after the hawkish comments from Fed President Dennis Lockhart earlier this week and a surprisingly strong report on the country's service sector growth that came out yesterday morning. Meanwhile, the US Central Bank, the Fed, is looking for further signs of a strong number in the jobs growth improvements, as well as inflation closer to the 2% in order to hike rates. This week's non-farm payroll data is key for further dollar support. Meanwhile, the rand remains weak as both commodity-based currency as well as an emerging market with structural imbalances. And this is blatantly obvious as the currency is now trading firmly above 12.50. In the interim, the UK and the Fed may enjoy more robust economies and place more pressure on the local units. Joining me today, Anthony Grant from RMB. Thank you so much for joining me. So it's been an interesting week. I think we were looking last week, Andre Cilliers and Andre Ehrenstein, we were talking about that 12.75. We briefly touched it after MPC. And then sort of, we had that dollar data coming out, the South African numbers not producing relatively well. However, that 12.82 was quite significant. And that was on the back of the Fed president looking at hawkish comments, looking for that hike in September. What is your view around that?
I think overall, the rand remains under pressure, as do most currencies, because of the strong dollar. So we were probably surprised after the rate hike that the rand didn't strengthen. It really didn't strengthen much at all. It continued the downward trend. Looking at the US economy to see how robust it is, non-farm payrolls being a strong number, but yesterday's services numbers showing the service industry being particularly strong, despite the ADP numbers maybe being not as strong. So, again, the US economy is still looking good and the dollar is still strong against all currencies except maybe the pound.
Well, that's interesting because I think we've got, we looked at the service, you had services and you had manufacturing, and it really does speak to that dollar strength because the manufacturing sector came under a bit of pressure just as a result of not being as competitive because of that dollar strength, but the services sector doing robustly well. So that dollar economy continuing to surprise to the upside. Were you surprised about the hawkishness of Mr. Lockhart's comments? Because that really has driven the market. I mean, you've seen that across the board. In fact, you've even seen it on commodities.
But I think it also shows that the market is still quite skittish. So I don't think Janet Yellen's message has changed. So throughout all her talk, she talks about a potential September hike or a hike this year. She's looking for the economy. She said that the US economy is strong. So I don't think it surprises the market. If anything, I think the market is saying, let's get this first increase over and done with. Let's get September out the way so we can stop talking about it, because it really is creating a lot of volatility in the markets. There's no doubt, on the whole, people think the US economy is strong and are looking for that rate hike.
Well, we've got non-farm payroll data out tomorrow, and that's obviously the big number this week. It's historically been a number that people have paid a lot of attention to purely because of the impetus that the Fed's placed on the employment data. However, that's kind of shifting now, Ant. I mean, you can just talk us through that sort of sentiment around, it's not really the jobs growth or the employment, it's more about the wage increases, and then also that inflation number. That's really been the sticky point that the Feds has been focused on.
So obviously the US is looking for something to stimulate the economy or continue growing the economy. So, if jobs are being created, but that wage inflation or people aren't feeling rich or there isn't a lot of money being pumped into the economy, that is a problem. So the services industry clearly growing. There's probably a lot of action happening there, but you've got to be careful of the manufacturing industry, and that's where a strong dollar actually can hurt that industry. So that's why they're so concerned about having a strong dollar. Having said that, against the euro, the dollar hasn't really broken free. At one point we were talking about parity. We were looking at very, very low levels. No. That 108 sort of 50 level seems to have held quite strongly. So the pressure of a strong dollar is maybe a little bit on the back foot, and maybe that's why the Fed believes there's an opportunity to move now.
Well, and I think that there's also, if we come back home again now, so we look at the South African economy, we're in a situation where we've got the slow growth, we've got relatively high inflation. However, that inflation's not being driven like we're seeing in the US by consumer spending. It's really around cost push pressures. So despite the fact that we saw a 51 cent deterioration of the rand against the petrol price, what is your view with regards to this rand continuing on this trend and the impact that it'll have on the inflation number, one with regards to the food prices and other imported prices, as well as those cost push pressures? And do you think that 25 basis points is really going to make any difference?
So, if you have a look, I always tell my clients, have a look at the long-term trend of the rand, and, long-term, let's look at the last 5 years. The trend is certainly unbroken. So we've had spells where, we've had a little bit of strength, and now we'd probably call strength down to 1250, but it seems like we've kind of re-rated back to that 1270 level. I do think we've got to try and test that 13 rand level fairly soon in the next couple of weeks. The rand is still on the back foot, and that will obviously put inflation under pressure. That does mean that the Reserve Bank probably will have to continue talking about rate hikes. But 25 basis points and the overall size of the cycle will probably be lower than what we expect. So a lot of people will be unhappy that we're talking about rate hikes because of the low growth in the economy. But I think at this stage, 25 basis points is probably not going to make a massive difference to growth. Yeah. We've got structural problems that need to be sorted out. We've got electricity problems which are really inhibiting growth more than the interest rates. Yeah. So I think that that's the message. We would have, the SARB would have to be careful about that inflation breaching that, because that is the one firm target that they have. They've got to protect that inflation range. So, they probably would not want to move this year again, but I think we have to look early next year for another rate hike from the SARB.
But then the question comes in, and I think that this is really what we've got to be concerned about. You mentioned it earlier in terms of the fact that the euro has remained relatively stable. In fact, against the pound, also the dollar is relatively stable. So those developed markets, nothing much happening, although that sentiment of dollar strength is really very evident if we look at the emerging markets. And that's as a function of people taking risk off emerging markets and putting it into the US because of that rate hike cycle that we're expecting. Now, in South Africa, anybody that's got a weighting in the South African market will look at that credit, what we talk about in terms of your CVA or your credits, or the risk that you attach to having money in South Africa versus getting a lower interest rate but better risk return in the US. So talk to us about, if the Reserve Bank errs on the side of not catching up in terms of interest rate hikes, and we do in fact start to see a hiking cycle out of the US, could we in fact be in for quite a surprise in terms of rand weakness?
Absolutely. I think the one positive thing, and we may have chatted about it before on your show, is that we don't believe we're at any risk of losing our sovereign rating, our investment grade rating. And that's fairly important for us to be part of bond indexes and to get flow as a matter of course. But as you know, there's a lot of speculative flow that does exist, and we are recipients of that. So there is no doubt, if the Fed starts increasing interest rates and our SARB doesn't follow, or at least keep the effective interest rate the same, we do run the risk of massive flows going out of the country, which will undoubtedly put pressure on the rand.
So that's really the big thing to watch. So, I think, just as a roundup for viewers this week, we have got non-farm payrolls tomorrow. That obviously is a big concern and a big number. But those underlying numbers with regards to the US economy and how much it's growing, that are going to have those knock-on effects to that inflation reaching up towards the 2%, because then there is no room for the Fed not to hike, because those are the two issues that they have obviously brought to the fore. So what is your big, is there anything that you want to put forward just in terms of what viewers should be watching for in the week ahead?
So look, I think it's always, before non-farm payrolls, it's always difficult to make any predictions. We've tested some 14-year highs and 14-year lows on the rand. So, there might be an opportunity for a slight pullback. And, on dollar rand, 1272 is a key level to see if we get back. But my gut feel is it's probably going to be a positive number tomorrow. My gut feel is we're going to test some of those weaker levels, and it, 20.02 on the pound held, 12.82 on the dollar held. We'll just have to see if those levels stay intact.
I'm going to make you pull out the big gun shortly, so we're going to have a look at where the rand against the crosses are going to trade. For now, we know where we stand. So let's pull out the big guns. Right, Ant, it's the levels. I need you to give me just your view in terms of what viewers can watch in terms of the rand dollar on the bottom and the top side. That pound, as you mentioned, around that 20 area is quite vulnerable. And if you're prepared to on the euro rand as well, I'd appreciate it.
So I think at this stage, you know, we would look at the 1272, 1282 as being key. Through 1280, we're definitely going to test 1290 and then on to 13. So strong numbers tomorrow, look out for that. I don't see, you know, if you close below 1272, I don't see massive strength coming through. Look for 1265 as the next sort of key level going through there. Euro rand again, you know, that 13 sort of 85 level is probably key. Depending, you know, if the euro weakens against the dollar on the back of the non-farm payrolls, we'll probably see a bit of stability in the euro rand cross, but we'll see the weakness in the dollar rand.
And that offsetting of the two currencies. So just in conclusion for the week, thank you very much, Ant, is Anthony thinks that we're going to see continued weakness. It really does depend, though, on the outcome of the non-farm payroll number tomorrow. If, in fact, we do see a positive number, we can expect further dollar strength, which will impact both the dollar rand as well as the cross rate. So looking for around 1272 as a base on the dollar rand. Potentially, if we do see further strength as a bottom, maybe 1265, but really looking for those weaker trends up towards 1285, potentially 1290, and then that big number of 13. Against the euro, look at that 1385 level, pretty moderate trading around that level, and also watching the pound around 19. However, if you'd like to send any questions or comments, you're welcome to do so at CNBC Africa, #CurrencyWars410, or myself at Bridget R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.
We have not yet been told. Yes, I can.
Yes, I can, loud and clear.
1, 2, 3, 4, 5.